Okay guys, here we are on the intraday time frame, and as you can see, the three levels that we marked on the daily look like a consolidation profile, which ultimately, once price made this swing low to this swing high, this is where we saw the actual swing low form on the daily, and we get our perfect retest to the daily fair value gap. Okay, and on this time frame, what you'll see is that price is fractal. What is a fair value gap on the daily time frame? On the intraday time frame, you're going to see it perhaps as a breaker block. In this case, it's going to be a breaker block. However, on other time frames, it could be another fair value gap or whatnot. The point is, we want to see confluence of nested arrays in the areas of point of interest at the daily. We have a breaker block. We have a nice order block formed here, which is what? We have a low risk buy here. Isn't this the same signature? Buy up here, displacement, runs this high, pull back into fair value gap, another major displacement. So this another order block formed here where they leave fair value at the fair value gap. So when price comes back here, it's a very simple buy. Now what I want to show you guys, because we don't need to go through every single model for you to understand how to trade retracement. What I'm going to focus on is three legs of price. We all know that we have buy models and sell models. So the thing that I want you to concern yourself with is once the buy to sell model or sell to buy model is complete, that third leg is where you're going to be looking at the overall balanced price range to form the swing point, which will give us the intended direction that IPTA wants price to be delivered. What does that mean? How do we know smart money bought at a certain area like this SIBI or sold at that certain area? Okay, so the thing I want to go into is how do we know that smart money sold here at this SIBI every single time? How do we know that that's where they're mitigating price? Well, hello, the stops are resting above these areas, right? Above and below these arrays. So what does that mean? That means every single time that smart money comes into the premium array, smart money's selling again. Then what smart money does was they take their profits above those highs and purge the liquidity there and sell there at the buy stops. So any real smart money traders that are holding on to buys, they go into a drawdown. And when price comes back to offer that price again to the upside, that's where the mitigation happens and they scale in shorts. All of this is starting with what? Displacement inside of the original gap. Now that's a lot of information. Go back and listen to that. How can I say that in a very simple way? When you're on the sell side of the curve, price is distributing. When we get into this reversal profile in the consolidation and it breaks structure, pulls back, and showing displacement to the upside, all of this is a retracement now because we hit a premium array. And what happens when we hit a premium array? We consolidate in these areas. What's happening in this consolidation, fam? Smart money is scaling in more shorts at the premium array and taking their profits above old highs. And then what do? Take a look here. They purge all the liquidity above the buy stops and run out all the buyers. So all the retail traders buying this support here and buying at these supports are getting ran out of the market here. And now everybody's really confused because we go into the next following week, right? And price goes on a bull run. Well, what they don't understand is this is not a continuation move here. This is a retracement back into the premium array. And notice this huge displacement. It's always going to come back to the displacement in the market, fam. You're going to see displacement form at the original displacement. What does that mean? IPTA is trading in this daily SIBI. Look at all of the trading that happened in here. Look at the stops that were generated here that they ran. Look at the consolidation, the stops that they generated here that were purged and reverted down immediately back into range. They come and hit this bullish order block on the daily, and what happened? Immediate reaction to premium level. And what's at that premium level? What we have here is another displacement on the sell side delivery. So now we had the buy side delivery, right? The sell side. rebalance. What is price doing here? Smart money is doing exactly what it's been doing inside the SIBI the whole time, just now at the discount level. They're going to generate liquidity. They're going to come back down. They're going to entice buyers to buy at this support when really they're just generating relative equal lows. They buy up, run the stops, purge the liquidity, and immediately revert down and run the original low here. And the same thing happens. Again, we get into another reversal profile. Everybody thinks that, oh, we're buying, it come up, they get into another bull run, and what happens? They come to premium array, fair value gap, discount level of the SIBI, and price does what? Shorts aggressively and then runs this low. So what I want you guys to realize at this video, this is a very short video because I've already explained everything in part 4 of the market profile series talking about retracement programs. This is now retracement programs 4A on intraday. What I want you to realize is that smart money is going to balance the price range to the full extent, but they don't do that in one shot. There's a lot of orders going into the market. So that's why we see a bunch of different gaps in the market, right? And a bunch of different order blocks in the market. People don't understand that not every gap is a fair value gap that's valid. Not every order block that you see, every up candle or last down candle before the aggressive move is a true order block. It all has to do with displacement. That's the process. The process starts with displacement. Displacement creates imbalance. Imbalance requires rebalance. And how do we rebalance and imbalance? We have to see runs on liquidity. That's how price is booked, guys. So when you go back and look at this video, you don't have to overthink anything. Just understand that when you see price dancing in a range, all of this is a consolidation on the 1 hour, but there's a lot of money scaling into the market in these areas at the premium levels. Look at the buyers, right? All the buyers, look at how the momentum on the buy side diminishes compared to the sell side. The sell-offs are much more aggressive. The sell-offs are much more aggressive. And because those sell-offs are aggressive, you have to understand that smart money is clearly following institutional order flow, taking the higher time frame bias. So every buy is a retracement, and every sell is a continuation of daily order flow. All right, fam, I gave you the sauce on this video. Please go back, review this video on the intraday time frame. Go back, review part 4, and make sure you understand the daily analysis that led me to understand how to do this. And then when you ask yourself, well, how do I get in? It's the same formula, fam. It's the same formula. You're looking for a strong up or down candle. You want to see a displacement in the market, which causes a market structure shift or a break of structure. And you want to see a retest to the fair value, okay? Specifically, the fair value gap. Sometimes it might be a breaker block, might be a mitigation block, might be an order block, but the highest probability is going to be in the gaps formed inside of the gap that created an imbalance, which becomes rebalance, and then we distribute or reaccumulate. It's very simple, guys. All right, I hope you enjoyed this video. If you took the time to take your notes, I know you're going to be a pro at market profiles. The next time you see a chart, you'll know exactly what's going on, and you'll be able to frame your analysis. You'll be able to enter your trades with confident execution, and then you'll be able to look back and say, hey, you know what? After taking the Good Eats FX course, I actually gained the knowledge I needed to be profitable in this market. Now I just need to focus on my psychology, my discipline, and consistency in the market. Because you already know it. Good Eats, we teach it all. Let's go.